Hi there, traders. This is Brad Gilbert with today's trading action. All right, now not a lot on the radar, right? And there's not a lot happening in the markets. The whole sort of market seems to be in a little bit of a shock, right? Following the weaker US CPI numbers, followed by the Fed coming out, sort of stating the obvious that they're not going to really do anything with rates, cutting rates until they see weakness in price pressures and or a blowout in unemployment, right? So they're really attaching unemployment, which has been strong, to the whole interest rate cycle. And that, to me, has blown out a lot of traders or a lot of expectations on where is the dollar going from here. Now, saw the US CPI number come out, the dollar index fell, and we're back to where it was. Now, you can see in here, like the weaker US PPI numbers did react, but it wasn't long lasting, right? So to me, there's been a bit of a repositioning. We're coming into the summer markets in the US. We're basically back to where we were pre-US CPI numbers. So not a lot has changed, but underlying things have changed. We've got a weaker CPI. We've got weaker PPI. The weekly jobless claims numbers were bigger, right? So it's like the underbelly is turning in the US, right? So I see this last move sort of artificial, because if we start to see a continuation of this US dollar weakness in the numbers, and we are seeing it in the core numbers now, the only one we have to attach to this is the employment numbers, right? The non-farm payrolls. We get those weekly jobless claims numbers, and they are, like sort of a bit of a weekly sort of knee-jerk refresh on what's happening. So let's keep an eye on those, because as we go forward, the unemployment situation could be the catalyst, right? And I usually sort of say, stay away from non-farm payrolls. But I tell you what, the Fed have brought it into the equation. Like these jobless claims, almost on the high end of expectations. And then you can see the PPI, final demand, and these numbers a little bit lower than the forecast, right? So I think I don't think the Fed has got it wrong. I think the market has misinterpreted what they aren't trying to be aggressive. They're stating the obvious, right? And if I come down here, this is the key sentence or phrase where Jerome Powell is really making sure everyone is aware. Either a more convincing decline in price pressures or a jump in the unemployment rate, right? That tells us what to focus on for the dollar. Outside of that, I think the dollar's going to move around with the various happenings in the market, of course. It does open the door for the other currencies, Euro, Sterling, Aussie, Kiwi, CAD, Swiss, to start to have a bit of an impact, because you know what, at the moment, and this is quite normal, the US dollar does dominate across the board. So as we come out of the North American session, come into the Asian Friday session, not a lot going on as far as the equity futures, and not a lot going on in the currencies at all. And well, you know what, to me, the US bonds are slightly lower. So I think the dollar, like, I can just sort of feel it, and I've been doing this for 35 years. I just feel like this is close to a top, right? We may get some strong numbers. Yeah, you might see a bit of upside moves, but at the moment, we aren't really seeing anything convincing. And right at the moment, I mean, the dollar index is sort of topping out. It's more of an indication of what the dollar is doing, right? So, but if you look at the dollar Swiss, okay, found a new low. We've got the high, it's sort of back in the range. Dollar yen's in the range. Dollar CAD is squeezed back into the range, as has the Euro, Sterling, Aussie, and Kiwi, right? So you'll be adjusting all your trend lines. Everything's back in the box. So what does that mean? Well, we start fresh from here, right? We've got direction from the Fed, what they want to see, what they're going to make decisions around. Now it comes down to trading what's in front of you. So today, when you come back in and look at the markets and go, okay, I've got this. This is a bit of a reset. There's nothing really coming out today. Okay, there's a few Japanese numbers. If anything, the Canadian dollar may be in the spotlight. Wholesale trade, manufacturing sales, and that's all she wrote. University of Michigan sentiment numbers there later on in the US, right? So that's all we've got. Not a lot to do. I wouldn't be sitting in front of the screens hoping for a miracle that something moves, because the markets have been diffused following the CPI. The Fed have diffused everything, and now it's a reset waiting for the next round of data. All right, so that's where we are. It sort of makes next week, you start looking through the numbers, trying to work out where the key bits and pieces are. We start to get into the underbelly of the market. We've got the RBA, interest rate decision, US retail sales. We're getting into these good second tier numbers that are not as volatile. They're much easier to trade, and they can tell us a bit more about what's going on. I can see the just on the face of it, the retail sales figures and the industrial production numbers. Okay, this is a pretty good trading day because the markets aren't going to be volatile around these, and these are key linking fundamentals that connect to the inflation numbers and employment, right? So let's keep an eye on that next week. Today, not a lot, just hold tight. And if you are trading, make it fun, right? Keep the position small. You don't want to be losing any sort of money on a day where there's not a real lot of direction going on. All right, guys, have a good one. All the best. Cheerio.